Imagine looking at your portfolio, right? And you see a potential 24,000% return.
Yeah, which is, I mean, that's almost unheard of.
Exactly. And it's not from, finding the next breakout AI startup or shorting some failing regional bank. You are looking at that kind of return simply for correctly predicting the exact week a sitting prime minister either resigns, loses power, or just calls it quits.
It really is the ultimate distillation of human behavior into just pure mathematics.
Right.
We're kind of moving past that era of betting on quarterly earnings reports. Now we're stepping into this space where people are betting massive amounts of capital on, well, the collapse of coalitions and literally the trajectory of a nation.
Yeah, and that is the incredibly high-stakes environment we are tearing into today for this deep dive. We're going to break down the mechanics of a leveraged trading analysis. It was published just a couple of days ago, actually, on June 20, 2026, by the platform Predmart.
And it specifically covers the betting against Bibi, right? Trading Netanyahu's 2026 election odds.
Exactly. It maps out the exact financial probabilities surrounding Israeli Prime Minister Benjamin Netanyahu and this highly volatile 2026 election cycle. So our mission today is really to look at how the absolute chaos of political campaigns, backroom deals, and, polling data gets compressed into these cold, hard, tradable contracts.
Right, turning abstract politics into actionable math.
Right. But before we really get into the weeds here, I do need to make something perfectly clear to you, the listener. We are dealing with highly charged, real-world political events today, but this deep dive is strictly about the math.
Exactly.
We are impartially reporting the polling data, the probabilities, and the market mechanics straight from the source material. We are absolutely not taking sides, we are not endorsing any viewpoints, and we certainly aren't favoring any political wing.
Yeah, and that is exactly how the traders approach it, too. I mean, the financial markets do not care about political leanings. The math doesn't vote.
Right, exactly.
The platform is really just a neutral arbiter pricing in reality. So whether a trader personally supports a candidate or, disguises them, it's completely irrelevant to the underlying leverage mechanics we're going to explore.
So it's sort of like a political stock market, where instead of buying shares of a tech company, you're buying shares of a specific future timeline.
That's a great way to look at it. You're buying probability.
Okay, so let's start with the event that essentially set this entire market on fire. Because to understand why traders are flooding this market right now, we have to look at how a vague political mess suddenly got a hard expiration date.
Right, the catalyst.
Yeah. So contracts for whether Netanyahu will be out of office by December 31st, 2026, they were trading over on Polymarket at around 43.5% probability back in March.
Which is pretty high to begin with, but yeah.
Right. But then by early June, that probability just surged to 65%. To understand that massive jump, we have to look at the structural collapse of the coalition in May.
Right, the ultra-Orthodox conscription crisis. That was really the fatal blow.
How so?
Well, you have to picture the Israeli government not as this solid monolith, but as a very fragile alliance of differing factions.
Right.
And the structural load-bearing pillar for Netanyahu's current coalition was the ultra-Orthodox bloc.
Yeah.
Specifically, Rabbi Dov Lando of the Degel HaTorah faction. When Netanyahu, when he failed to advance the legislation exempting the ultra-Orthodox from military service, Lando just withdrew his support.
Wow.
And that wasn't just, a political disagreement. It was the literal removal of the mathematical baseline required to govern.
Which triggered a genuinely staggering parliamentary moment on May 20. The Knesset, Israel's parliament, voted to dissolve itself, and the final tally was 106-0.
Yeah, unanimous.
Not a single member of parliament dissented. Now, I understand why the opposition parties would vote for dissolution. They want election to seize power, right? But why would Netanyahu's own allies vote to collapse their own government? Is a unanimous 106-0 vote is that a checkmate in chess?
It really is. It forces the prediction market to stop guessing if an election will happen and focus entirely on when. And as for why his allies voted for it, that is where the game theory of parliamentary politics comes into play.
Okay, lay that out for me.
Once Lando pulled his faction support, Netanyahu's allies knew the government was functionally dead. They just didn't have the numbers to pass a budget or, survive a vote of no confidence.
Right, they were stuck.
Exactly. If they tried to hold on, they would just bleed out slowly. They'd suffer humiliating legislative defeats week after week. So by voting unanimously for dissolution, Netanyahu's bloc gets to actually participate in controlling the narrative.
Oh, interesting.
Yeah, it signals a strategic reset
Right.
rather than a chaotic collapse. They sort of embrace the inevitable to try and shape the timeline of the upcoming elections.
And that timeline control is fascinating, especially given what happened like a few weeks later. On June 10th, Netanyahu publicly confirmed he would seek re-election.
Right.
Now, intuitively, if a historically entrenched leader announces they are digging in for a fight, you would assume the market odds of them leaving office would drop. But the December 31 exit contract actually strengthened. Why is that?
It's a really brilliant paradox of prediction markets.
Yeah.
You have to look at the entire board of probabilities.
Yeah.
Before June 10, traders were hedging their bets across multiple different timelines. There was a slice of probability that he might resign in June, right? Another slice that he might step down in July due to health or legal pressure, and then a large slice for the post-election window.
So his announcement basically just wiped those early timelines off the board.
Completely. By declaring his intent to run, the probability of an early voluntary exit collapsed to near zero. Those summer contracts became pretty much worthless.
Wow.
But the fundamental forces pushing him out, I mean, the 106-0 dissolution, the fractured coalition, none of that had changed. So all of that probability just sort of vacuumed up from the summer contracts and consolidated directly into the December 31 post-election window.
So he gave traders a clean binary setup.
Exactly. They no longer have to guess when the exit might happen. They can concentrate all their capital on the electoral outcome itself.
And pricing that electoral outcome brings us to the actual challengers, because the market isn't just weighing Netanyahu's weaknesses, right? Traders have to weigh the viable alternatives. And Israeli coalition building, I mean, it's like assembling a massive jigsaw puzzle where the pieces actively try to change shape while you're holding them.
Yeah, that is the perfect analogy.
Because getting the most votes is irrelevant if you can't cobble together 61 seats in the 120-seat Knesset.
Right. And the shifting shape of those pieces is exactly what traders are modeling right now. The momentum shifted heavily on April 26 when Naftali Bennett and Yair Lapid formed the Bayachad party.
Right.
And then Bennett went on a very aggressive offensive, particularly in a June 3 Channel 13 interview, where he directly attacked Netanyahu's handling of the Iran conflict.
Okay.
That signals to the market that the opposition isn't just, forming. It's actually organizing around a definitive, aggressive focal point.
Right, and polling trackers from late May show the anti-Netanyahu bloc capturing between 59 and 61 seats. While Netanyahu's coalition is trailing at 48 to 51 seats, Bennett is even leading Netanyahu 40 to 37 in head-to-head matchups.
Yeah, the numbers are striking.
But this creates a massive discrepancy that I want to drill into. If the opposition is polling at 61 seats and Bennett is winning head-to-head, why is the December 31 exit contract only sitting at 65%? And furthermore, the data shows Netanyahu still retains a 35% chance to win the next prime minister election outright. Given a 10-seat polling deficit, how is his survival probability still that high?
So professional traders call this the fade case. You can never, ever underestimate Netanyahu's historical capacity to weaponize coalition math.
Really?
Yeah. The market is aggressively pricing in the reality that the opposition might win the popular vote, but completely fail to form a government. Think about the volatile pieces of that jigsaw puzzle you mentioned.
Okay, yeah.
You have Gadi Eisenkot's Yashar party polling in about 19 projected seats. And public polling, notably from the Times of Israel, currently views Eisenkot as the most fit for the prime minister role.
Ah, so Eisenkot could easily demand a rotation agreement or just, refuse to sit under Bennett?
Precisely. And if they gridlock during negotiations, the mandate to form a government could just slip away.
Uh-huh.
Add to that the extreme uncertainty regarding the Arab parties. Will they actively participate in a blocking coalition against Netanyahu, or will they just abstain? Netanyahu doesn't necessarily need to win 61 seats outright on election night.
Wait, he doesn't?
No. His strategy often relies on preventing his opponents from unifying their 61 seats, which forces another election, and then he remains in power as the caretaker prime minister through December 34 and beyond.
Oh, wow. Okay, so that structural friction completely explains the spread. The market gives Bennett a 32% chance to be the next prime minister. Netanyahu sits at 35% and Eisenkot is at 17%. So the gap between Bennett's 32% win odds and the overall 65% chance that Netanyahu leaves office, that just represents the chaotic void of coalition building.
Exactly, is the friction. And to navigate that void, traders use something called a barbell approach.
Okay, walk me through the mechanics of that strategy.
So the barbell approach is how you mathematically survive the volatility of the Israeli parliamentary system. On one end of the barbell is your core thesis. Let's say you allocate 70% of your trading capital to that 65-cent December 31 exit contract.
Right, because you believe the fundamental polling of the 59 to 61 seat deficit will hold true.
Exactly.
And the other end of the barbell.
The remaining 30% is kept in liquid cash.
Why?
Because the market never moves in a straight line.
Yeah.
Come September, Eisenkot and Bennett will inevitably clash in the media over, a cabinet position or something.
Sure.
Polling might show a slight dip for the opposition. Weak hands in the market will panic, and that 65-cent contract will drop to, say, 50 cents. You use your 30% liquid cash to buy that dip, lowering your average cost. You're absorbing the volatility rather than being shaken out by it.
That is wild. And absorbing that volatility becomes exponentially more complicated when we introduce the core mechanism of the Predmart platform, which is leverage.
Oh, absolutely.
Because having a nuanced theory about Gadi Eisenkot is one thing, but applying leverage completely alters the risk profile. If a trader buys the December 31 exit contract at 65 cents and it resolves to $1, meaning Netanyahu is out by the end of the year, that's a 35-cent profit. That is a 54% unleveraged return on deployed capital.
Right. But Predmart acts as a bridge, taking those base probabilities from Polymarket and allowing traders to apply up to 5x leverage.
So let's do the math on that. At 3x leverage, your 54% return instantly becomes 162%.
Yeah.
If you push it to 5x leverage, you are looking at a 270% return. The traders who got into this market back in March, when the exit probability was hovering around 43.5 cents, they are looking at roughly a 245% return on their margin if they hold through a YS resolution.
It's massive.
Yeah.
And the contrarian trade is even more extreme.
Right. If you bet on Netanyahu's 35% survival odds, a 5x leveraged position offers a potential 930% return.
Yeah, nearly 10 times your money.
But I have to play devil's advocate here and push back hard on this. Applying 5x leverage to political polling in the Middle East seems fundamentally irresponsible. I mean, political polling is notoriously fickle. We are talking about human sentiment, not quarterly corporate revenue.
Sure.
One systemic polling error,
Right.
one geopolitical flare-up, one margin call, and a trader is entirely wiped out. Is this really anything more than gambling disguised as a fancy spreadsheet?
It's a fair question. But the line between gambling and trading really lies in how you size your positions against what quants call probability regimes.
Okay.
You are absolutely right that a 5x leveraged bet on a single political outcome carries massive liquidation risk. But professional traders aren't blindly throwing their entire net worth at this. They are systematically exploiting the 65% threshold.
Why is 65% the magic number?
Well, look at the extremes. If a contract is trading below 50%, the upside is massive, but you are structurally fighting the trend. You need the consensus to be wrong.
Right.
If a contract is trading at 85 or 90%, the momentum is clearly with you. But the mathematical upside is so tiny that applying leverage just isn't worth the risk of a black swan event. The juice isn't worth the squeeze.
So 65% sits right in the Goldilocks zone.
Exactly. At 65%, you have cleared the consensus threshold. The fundamental data, the 106-0 vote, the 61-seat polling deficit, it all supports the direction of travel. You aren't fighting the crowd.
Yeah.
But because of the structural friction of the coalition building we just discussed, the price is artificially suppressed. There's still 35 cents of upside. The market is essentially paying you a premium to absorb the anxiety of the coalition negotiations. That 35-cent gap is where the leverage math actually justifies the risk.
Wow. Okay, that makes sense for the main event, the December 31 exit. But the source analysis also dives into the periphery of this market. There are these cheaper, short-term fringe contracts that offer astronomical returns.
The lottery ticket.
Exactly. Like the June 30 exit outcome sits at a mere 2%, meaning the market price is a 98% probability that he remains in office through the end of June. But if you apply 5x leverage to that 2-cent contract and a miracle happens, you theoretically see a return north of 24,000%.
It's incredible. And you also have the July 31 dropout contract trading at 16%,
Right.
which tracks voluntary withdrawal due to health or legal negotiations. And a contract for presidential pardon from Isaac Herzog trading at 5%, since Herzog delayed a pardon decision back in April to push for a plea deal instead.
Then there is the corruption trial wildcard. The prosecution finished their cross-examination on June 16th, and the defense reexamination is queuing up. A late 2026 conviction could trigger legal disqualification. That would act as a backdoor YS resolution for the December 31 contract, completely bypassing the need for an election or a coalition agreement. But honestly, looking at a 16% dropout contract, why tie up capital there? You're basically buying a lottery ticket that only pays off if an earthquake hits during the Super Bowl. You are parking your money and praying for an unverified health rumor or a sudden plea deal.
Huh.
If the event doesn't happen by July 31, the contract goes to zero. Why would any serious trader deploy capital there?
Because of a concept called asymmetric leverage math. The beauty of these platforms is that you do not have to hold the contract until resolution. You don't need the event to actually happen to make a massive profit.
Wait, really? Walk me through how that works in practice.
Okay, let's say you allocate a small amount of capital to that 16-cent dropout contract. You are buying it precisely because the market is deeply skeptical that he will resign voluntarily.
Right.
Now, fast forward 2 weeks. A prominent journalist tweets an unverified rumor about a closed-door meeting between Netanyahu's lawyers and the prosecution. Or maybe a sudden delay in the trial schedule sparks health speculation. The market reacts instantly to the unknown. The probability of him dropping out spikes from 16% to 40% in a matter of hours.
And you sell into that spike.
But precisely. You liquidate your position at 40 cents. You just captured a 150% unleveraged gain. If you had that position at 5x leverage, you just walked away with a 750% return.
Wow.
2 days later, the rumor is debunked, and the contract crashes back down to 10 cents. But it doesn't matter to you. You aren't trading the resolution of the event, you are trading the volatility of the skepticism. At 16 cents, the downside risk is minimal, but the sensitivity to any breaking news provides massive asymmetric upside.
You are monetizing the rumor mill itself. That is incredibly sophisticated. So pulling all these threads together, the probabilities, the coalition friction, the leverage math, we can basically build a definitive chronological roadmap for you, the listener, to watch unfold over the remainder of 2026.
Yeah, the calendar really acts as the ultimate forcing function for these probabilities.
Right, so July is defined by that exact volatility we just discussed. With the Knesset dissolved and the election campaigns ramping up, July carries major dropout and trial risk volatility.
Exactly. Rumors and legal maneuvers will cause those fringe contracts to violently swing.
Then we hit the critical window, September 8 to October 20. This is the official time frame for the snap election. And the analysis notes that September 8 is heavily favored because it deliberately precedes Rosh Hashanah on September 11.
Right, because the mechanics of the calendar directly dictate the political strategy. No incumbent wants voters going to the polls immediately after a major holiday period where, economic or security anxieties might have festered around the dinner table.
That makes total sense. Which pushes us into October and November. The actual voting is over, the seats are tallied, and this is where the December 31 contract faces its ultimate test. This is the 2-month window entirely reserved for the chaotic coalition formation.
Yeah, the jigsaw puzzle.
Exactly. This is when we find out if Bennett, Lapid, and Eisenkot can actually fit the pieces together, or if the friction causes the anti-Netanyahu bloc to collapse in on itself.
And that is the exact moment the barbell strategy proves its worth. The market will swing wildly on every leaked quote from those negotiation rooms.
So looking at this entire ecosystem, there is a profound takeaway here. Even if you never intend to log onto Predmart or, trade with 5x leverage, watching these prediction markets offers a radically clear, BS-free lens on geopolitical events.
It really does.
When you consume traditional political media, you're subjected to punditry, spin, and narrative building. Every politician is projecting absolute confidence. Every analyst has a bias.
Well, the noise is deafening. And it's usually designed to obscure reality to benefit specific agendas.
But when real leveraged capital is on the line, the noise instantly evaporates. A trader might love a candidate, but they aren't going to set their money on fire to support a delusional narrative. Hard mathematical probabilities take over. The market strips away the emotion, the rhetoric, and the posturing, leaving only the cold mechanics of those 61 Knesset seats.
Yeah, it forces brutal honesty. You simply cannot bluff a leveraged market for very long.
But I want to leave you with a final thought to chew on, something that builds on this source material and pushes into slightly dangerous territory. These prediction markets currently act as a mirror, right? They perfectly quantify the end of a political era based on the data available. But as prediction markets grow in volume and public visibility, they might stop being just a mirror.
What do you mean?
Well, if these platforms become the primary way the media and the public gauge a leader's viability, could the betting odds themselves begin to influence the decisions of the politicians?
Oh, wow. So, like, the observer effect applied directly to statecraft.
Exactly. If a prime minister wakes up and sees their own survival odds drop to 15% on a highly liquid market, does that internal data point suddenly demoralize their remaining allies? Does it embolden a challenger like Eisenkot to strike a week earlier than planned simply because the market signaled vulnerability?
That is a terrifying thought.
We might be entering an era where the market doesn't just predict the timeline of historical events, it creates a self-fulfilling prophecy that dictates them. You aren't just watching the ticker tape of history anymore. The ticker tape might be the thing writing the history. Think about that the next time you see a probability flashing on a screen. Until next time, thanks for diving deep with us.